Well, we can't talk about valuation. As you know, we're on file now. But I think the market continues to be strong. And as we think about the public markets and however you go public, via a direct listing, a SPAC, or a traditional public offering, we believe that's for the long run. And we think that this will be a dip. And obviously, it's been a tremendous dip in the lodging sector, but it's enabled the company to reinvent itself around experiences. And it also has kind of created a new sector for them to go after. If you think about people who might be leaving dense areas or cities and finding a new place to work from home.
So you're saying that there may be more Airbnbs coming online in the suburbs, but do the suburbs have different standards and regulations that might be sort of impeding to Airbnb?
I think a lot of municipalities have different regulations. It's not materially different than cities, and Airbnb has worked with a lot of the major metropolitans around the world to enable people to safely rent homes. I think the pandemic has created another layer of regulatory issues, but the company is working to resolve them, because in many ways an Airbnb is much safer than a traditional hotel in terms of guests and common spaces.
I'm curious, Rick, about the issue of urgency in this filing. It's widely reported that a lot of employee stock options will expire in the fall, creating both this kind of rush to go public, maybe not at the best time, and also possibly a whole class of people who are going to be looking to sell their stock as soon as possible. Is that something that should make investors think twice about getting involved from the start here?
I don't think so. I think you're looking at the long-term opportunity here. Obviously, employees and early investors are going to be locked up, so it won't be an immediate urge and an immediate rush. There will be a lockup, and there'll be the beginning of an orderly transition from early employees and early investors to long-term public investors, both institutional and retail. I also think that there are ways around dealing with employee options to make sure they don't expire, and making sure the earliest employees, often who contributed the most to the company, are treated fairly.
Yeah.
So I think you would have been surprised. I saw a tweet the other day that in February Brian Chesky would have been surprised he didn't go public in March or April, and in June he would have been shocked that he was going public later in 2010. The world's moving pretty quickly, both in the stock market as well as all the data and information around the pandemic. I think the most important thing is to think about the long term and where we're all going to shake out.
You've mentioned the SPAC, the direct listing possibility. Are those still on the table for Airbnb?
I can't talk about that, but I know I'm not going to speak directly to Airbnb, but I know our companies who are looking to go public are looking at all of those as alternatives. This last cycle of investment, companies have stayed private much longer than they had historically, and there's a lot of companies who are just getting to that point of hitting public market type operational and financial metrics, and they're evaluating each of those types of ways to transition into being a public company.